Good morning, good morning. Good morning, everyone. Welcome to Wednesday the 2nd in our Micro E-Futures Globex session. Just a fancy way of saying the morning session. Hope everyone is well. Hey, Raj. Kevin, how are you? Ben, how you doing? Hey, John. What's up, Damascus? How you doing? Okay. Well, it's been an interesting month end and a new month. Let's go take a look at the bird's eye. Our overnight inventory is short. Now, why do I say that? Because the bulk of that inventory is underneath the close of the previous day. And we already had an inventory correction from around 56, 61 all the way up to 73. But I'm going to show you something when we get to the next chart. And this is the concept of knowing where your sellers are going to be, which is, something I used to always look at, but I never vocalized, I never spoke about it until recently in the room. And I just always assumed people would know where the sellers are going to be. And that's just years of making markets and being the seller. So when you are the seller, you know where other sellers are going to be because you have to price compete with them, right? So if I'm selling 1,000 units of something and John and Damascus and Ben are all selling the same product, well, I need to price compete with them so I can capture the buying, right? Capture the customers. So, and then I realized that it's so clearly shown on a chart, and it's something that we just used to look for. I find it very interesting that everyone's like, "Wow, it's just like such an old school thing that nobody does it anymore." So we're gonna bring that back, right? It's like the song "Return of the Mac," right? For all you older folks out there. Let's go take a look. So there's our overnight inventory. Hang on, just wait for the screen to switch. Okay, there's yesterday's close, and our overnight inventory time and volume profile is underneath the close. Okay? So that basically means that you look for a move higher, which we had here in J period, right? That's this. Okay? And guess what? They sold into it. So when you have inventory corrections, you look to see where they sell into it. And if you look at the chart, there were sellers. There were sellers here and here. And guess what? They let it breathe for just a couple of points and then they labeled it again and sold into it again. See? So now we know that we have a 71 seller. And that 71 seller has some size. How do we know that the 71 seller has size? Because they sold at 2 o'clock, they sold at 7 o'clock. 5 hours later, they still got product there. Why? Because they're buying product here and they're selling it here. Right? That's their job. That's the wholesale job. Okay? So right now we have this balance. I've got 64.5 to 69.5. And what do? We just simply trade the rotations. Okay? So we are inside yesterday's range. We're inside yesterday's value area or cost basis. Value area in market profile is just a fancy way of saying cost basis. Now, you folks should all know what cost basis is, right? Anyone not know what cost basis is? It's okay if you don't. Cost basis is how much the inventory is priced at. Now, say if you're long, you buy one share of stock at $1, another share of stock at $2. You own two shares, and your cost basis is $1.50, right? So what is the goal in a market is to take your inventory, right, which has a cost basis, and sell it at a higher price for profit, right? And that's what creates this movement. So when order flow comes in and you have inventory, now order flow is the most widely used term in trading. Everyone talks about order flow. They make it sound like some mysterious thing that you need special software. You don't. Order flow is a fancy way of saying customers coming into the store. That's all it is, right? Terms like liquidity are overused as well and used incorrectly, right? Liquidity means, can I sell 1,000,000 shares of stock? Stock's trading at $5. If I start selling 500,000 shares, will it knock the price down from 5 to 3? That's what liquidity means, right? Nothing else. Can I go buy 1,000,000 shares of stock? It's trading at 6. If I buy it, will it start pushing the price up to 7, 8, 9? Or is it liquid enough that I can go buy 1,000,000 shares and the market won't even notice that I bought it? That's liquidity. Liquidity is the ability to transact size without adversely affecting price. And it means nothing for you as a retail trader because you're not trading size. So it's no use. When people will go, yeah, there's liquidity down there or something like that. That's all bunk. Okay? Right? So what do we focus on? What is the information that we use to give us good information so we can actually make money? And more importantly, what is the information that we can use so we don't lose money all the time? Right? So we make smart business decisions. Right? It's very simple. We have a trade setup that involves doing the same thing over and over and over again, and it's based in common sense, right? So you don't have to go looking all over the internet. You don't have to look at 20 million videos. All you have to do is develop an execution plan that's based in reality. Okay? And then learn when not to trade. Like right now, we are in the middle of this blue zone. Right? We liquidated off the 70s down into the 67s, and we're just kind of stuck here. So is there a trade? Right? I can immediately look at this and in 10 seconds go, there's nothing to do. Right? Let's go take a look and let's do some intelligence work, shall we? So we know we've got sellers there. Right now we had sellers here, and we're cleaning that out. Okay, so there's some buying coming in to clean out the 68 quarters. And do you see, if I make this really big, when it's slow, do this. Enlarge your chart and watch, and you'll be able to see, oh, there's a seller right there under 69.5. There's a 69 quarter seller. Right? Why is that important? Well, that's so you're not delusional. Right? You see a lot of traders, I'm going to buy it at 67 and it's going to go to 56.80. Well, first it's got to get past 69 and a quarter. And if it can't, dun dun dun, right? Now, where do they stop selling? They seem to stop selling around here. You notice right here? Because there are bids here, there are buyers here. So when they come down to where the buyers are, they move the price higher to make the buyers chase until they get to a place where all the sellers start competing and then price goes down. Right? Now, you can overcomplicate this and you can talk all sorts of poop, right? No, John, that's theft. Mark, let me repeat this. Market orders are the price you pay for the market to provide you with the liquidity to execute immediately. Is this also liquidity? No, it's not. That is brainwashing, and it is entirely wrong information to steal your money. You don't need liquidity. Remember what I said? Unless you're trading 500, 1,000 E-mini contracts, and if you were doing so, you wouldn't be using market orders. To get that liquidity, you'd have to use the thing that sits on top of your shoulders, which is called your brain. Okay? So that's all BS. Right? Market orders are for people who don't know what they're doing. Okay? Professionals buy on the bid, sell on the offer. If it's a fast market, you take the bid, or you hit the bid, or you take the offer. Right? Market orders are just a way to screw you. Right? The only time you should use a market order is when you use the flatten button, is if you get into trouble and you hit flatten, and that will market you out. Okay? You don't need liquidity. Like I said, and I'll say this 1,000 times, retail traders should get rid of certain terms. One is unfinished business. The other one is liquidity, right? The other one is order flow, right? Those are all terms that are insanely misused. And because nobody knows the difference, they're stumbling around using them thinking that they're bright, but they're not, right? What you need to focus on is, say here, right? Say you're doing a look below 56.69 and a half and fail, right? So you're looking at that, you're thinking, oh, you know what? It's cleaning up. Maybe I can go long, right? Well, you know there's a seller at 71 and it's a slow market. So let's see, if we did buy it, right? Say we put in a 70 and a half bid and put your stop at 69 and a half, right? So you get tagged at 70 and a half, right? Put your bid at your stop at 69 and a half. Now, you know there's a seller there, right? So the next level is up here. Put a 72 offer out, right? So you're long 70 half, stop 69 half, right? This is a test trade to see whether or not we have the customers to merit taking price over 71. Now, if you don't, that trade's going to be a scratch for 4 ticks. Right? You can see that there's a seller right there, right? And then there'll be a seller here because the top of the candles are where the sellers initiate and compete. So if we have the order flow, if we have the customers, right? If we have the customers, we can raise price over 71. If I'm long 70 and a half, well, I might be long a little early, right? And that happens. That's why you do test trades when you use the micro, right? So if it takes out 70, I'm pretty sure I'm going to get stopped out, right? If we offer under 70, there's 70. If we offer under 70, I'm pretty sure that my 69 and a half bit stop is going to get nailed, right? This is a structural way to trade. So when you do get stopped out, your stops see I'm out, right? So your stops get taken and it gives you information. I was too early, right? I knew there was a seller there and we didn't have the customers to warrant increasing prices. So I was early on that trade, right? There's no follow through buying over 70. Does that make sense? Keep it simple. Now you'll notice I got stopped out. I'm down a point. Do I care? No, because that is the cost of doing business, right? That's the cost of doing business. And see, the sellers are now competing under 69 and a half. So it's good that I got stopped out. So I paid $5 plus commissions to find out that I jumped the gun, I'm early, and the market's not ready to accept over 70 yet because we don't have the customers. So now I'm not adding to a losing trade. I'm not trying to justify being long. I'm gone. I'm out. So as soon as you're out of that trade, I was long, what, 70 and a half, 69 and a half out. Now it's trading at 68. There is no business reason for me to be long because the business reason for me to be long would be that there's no supply under 69 and a half. Does that make sense? So if there's nothing for sale under 69 and a half, I could stay long. Obviously, product is for sale at 68 and a half, so there's no point in me being long. That's the business reason for the trade. No, cost basis, Jungian archetypes. And welcome to the room. I haven't seen you in the room before, right? You've got to have a business reason to be in the trade. If you don't have a business reason to be in the trade, there's no sense being in the trade. Okay? And you have to think like this. If you don't, you're going to get sucked in to all this BS that we use to justify really stupid business decisions, right? It's common sense. Yes. Hey, Mr. Cure? I don't know how to, am I pronouncing that right? You could. Indeed, you could. That's a look above and fail. So you'd be shorting here at 69, right? Your stop would be, once again, 69 and a half, 70. Now, where did they stop selling? They stopped selling here for some reason. So you'd have to put bids in and let the market, your goal would be 64. But now you have to analyze the type of business that's going on. So it's kind of slow and choppy. See, you have that seller, which is good, right? We've got that seller right here. But if that seller moves their price higher, then your short starts becoming invalidated. And there are certain times where, and you know, everyone's done this, right? You'll go short, you'll get stopped out. You go long, you get stopped out. You go short, you get stopped out. That tells you that the business at the time is what we call a wholesale slanted business. It's not for you, right? When it's choppy with no follow through, that's for wholesale traders. That's not for retail, right? That's not the type of business that you are equipped to do, right? Q works. Q's easy, right? And sometimes there's no business to be done. Sometimes it's a slow, you know, it's just a slow morning or a slow night. You just wait for more customers. That's what people do when they're like, if you're sitting at a flea market selling something and there's nobody coming, you just sit there and have a coffee and wait for new clients, new customers, right? If you can visualize that, then you can actually make a living doing this, right? With practice. Look at how tight those candles are. The last 5 minutes of candles. Look at the range of them. There's no business to be done for you there. The business that's going on is a wholesale business, right? Wholesalers don't pay commissions. Not the way we do. So they can buy 1,000 at 68, flip 1,000 out at 68 and a quarter. That's how they do business. That's a wholesale business. That is not a retail geared business. So you have to know when your type of business exists. Otherwise, you're just getting in the way. Sure, why do I use the 5 p.m. close as opposed to 4:15 or 4? because I want to know where all the bodies are buried at the end of the day. I want to know where they stash all the inventory at the end of the day. I am an inventory trader. And guess what? So are you, even though you don't know it. We are all inventory traders. People like to use fancy words. I'm a fib trader. I'm a this trader. I'm a that trader, right? I'm a fraggle trader or whatever the hell. No, you're all inventory traders. And I need to know where that inventory is at the end of the day. Because sometimes that 415 close that we used to use, right? There's 45 minutes of trading after that. I want to know where they stashed all the goodies. Does that make sense? It's really simple. Does that make sense? Right? Everything I do is based on common sense and business reality. There's a lot of traders out there and a lot of these education services where they don't talk to you about the reality, right? Once again, everything has to be grounded in reality. If it's not, it's useless to you. I want to know what happens that last hour of trading between 4 and 5. Even though it's not for us, right? That's for institutional traders, right? That's so they can move around their inventory. They can mark their inventory to market, do whatever they need to do. But I want to know, say, because sometimes we sell off and then that N and O period close higher. Okay, so say the M low closes here, right? And the O low is lower. I want to know, sometimes we'll have a sell-off and then the N and O period will close higher than that 4 o'clock close. That tells me, maybe we'll take that product and sell it up here in the overnight, right? You don't have to look at the size of the volume. That's inconsequential. Where the close is, did it close higher? Because that's how people get trapped short. Sometimes the market will sell off, and then the last hour will trade higher, and they don't look at that. And then they'll be shorting, but they don't realize that if the last hour closes higher, there's no selling pressure, right? See? Common sense, right? Everything is common sense, right? But traders, retail traders, are not taught to think with common sense. Exactly, Mike, right? They're taught to believe some kind of fancy garbage, right? Which makes no common sense. Okay? So we've had that seller at 69. Now, my buddy Howard was asking me, when there's constant sellers and I'm short, you can stay short as long as those constant sellers are there, right? Hope? Sandy Hermano, hope is not common sense, brother. We hope you use common sense, right? You have to have common sense in trading, right? You're a business person. This is a small business. It's my pleasure, right? The trade has to make sense. The reason for the trade has to make sense. If the reason for the trade doesn't make sense, you have to be gone. You cannot justify being in bad trades. You just can't. And once you get that into your head and you understand that, hey, I'm long because there's nobody, I'm long at 5, right? For example, here's $5. right? And I'm long at 5 because nobody's going to sell underneath 5. Well, all of a sudden, if somebody starts selling underneath 5, why would you be long at 5? Does everybody get that concept? Right? So there's $5. I buy 5.10. My stop is at 5. Right? The reason I'm long at 5.10 is I think that nobody needs to sell under 5, so the market will rotate up looking for sellers. Once it gets to 5.5, I'm going to sell and take advantage of that. Now, what happens if somebody comes and sells under 5? Why on earth would I be long? Here comes London. Let's see what they do. Yeah, if it needs more focus, then just think about it. Spend some time thinking about it, right? Let it seep in and visualize it. Because unless you do that, you're wasting money unnecessarily. See, if you were long 66, see how the offer is moving up, but there's no print. There's the print, right? Now you know that there's going to be sellers here. So if you had bought 66, sell it here at 68 and a quarter. If you have 2 contracts, maybe put one at 69 for sale. And if it doesn't execute, get out of the trade. Boom, there you go. If you have 3 contracts, put your next sell order there. If you have 4 contracts, put your next order at 70 and a half. Now, once the market starts offering under 69 and a half, get out of town, right? If not, you can stay long, right? You can stay long because nobody needs to sell down here. Nobody needs to sell here. So had you bought 5 or 6 contracts, you sell at these levels that I've drawn out. Or you try and sell a tick or two underneath them. So you make sure that you actually get a fill. Does that make sense? Nice trade, Moran. Now that trade is an adaptation of the look below and fail. It is the fail to look below. So Moran would be buying in this level. Her stop would be 64 and a half, and if her first target would be that 69 that we had, and then 69 and a half. Now we hit that seller here. Let's see if there's enough buyers to lift price up to 73. So if you were still long, say you were long 66, 67, right, against the low of that candle, right, you should be out of that trade by now, right? No. Breakouts are for selling stock into or selling product into. Breakouts are for suckers, right? Size traders sell their position. The breakout creates buying that we can sell size into, right? I only enter on the look below and fail or the fail to look below, right? So had you been long 66, 67 and you didn't sell into this strength, now you're coming back to your entry point. Do you understand why it's important to sell into the strength of that move in a market where you don't have much order flow, order customers? Does that make sense? Beautiful trade, Moran. There you go. Now you're a proper villain. Beautiful. Ivan, I only enter a trade when I see that there's a seller or I see that the selling's done. I don't know. I am not a momentum trader. I'm an order flow trader. There are some people who can trade breakouts and do it well, but most people get destroyed trying to take a breakout. What a breakout does is it gets that part of your human brain excited. Ooh, movement, movement, right? I love I love breakouts when I'm long size because I can just hammer it, right? That's what you guys call a false breakout. So when a stock stays at $5 or a product is at 5, right? And there's a seller at 6 and it breaks 6 and I'm long under 6, I will sell every share I have into that breakout because that creates the buying. Oh, there's 64 and a half. Cool. Rotation all the way back down. Does that make sense? It is a poor low, Raj. Thanks for pointing that out. 61 is a poor low. Do you think it holds tonight? I don't know. Right? Remember, we use your desperation and greed to profit, right? Your greed and your desperation, that's where we maximize our profits. When you get greedy and when you get desperate, that's when you can be taken advantage of. And there's always someone waiting. Watching that overnight low at 61, let's see if it gets taken advantage of. Let's see, can we take it? Come on. If we break 61, that's a double bottom, that's a poor low. So there's some competitive buying there. Now, the market's going to rotate up looking for a seller, right? So if you're shorting under 64, right, 64 and a half, you need the market, you need the sellers to come down and compete here, right? If they don't, then that short's no good, right? Same concept, right? You're shorting because sellers are competing. If the sellers don't compete, there's no reason for you to be short because there's buying competition at 61. Let's see if that breaks. If that buying competition sees sellers, they will get rid of their bids. They'll move them lower, right? See, that seller's still there. But if that seller goes away at 63 quarter, be careful. Watch. There, see? Right? That's how you prevent from getting caught short in the hole. Right? Buying competition, you lose your seller, there's no reason to be short. Right? Now, if you can rethink it, watch at 64.5, maybe we do another look above and fail. But if that poor low holds, then this is a long. Okay? And that's how you use market profile. This is the one thing about market profile. It tells you that there's buying competition here and you should not be shorting. If you take a test short, right? If you take a test short and the offer lifts, be careful. Right? If that poor low breaks, Then we're going to come down to 59. Watch. Responsive buy. It is the anatomy of a double bottom, exactly. Right? Now I'll let the large traders work this out. I don't want to pay that bill. I'll go long if we get back over 65 because I know where the sellers are going to be. That seller's back at 63, right? But there's buying competition at 61. So I'll let the large traders work that out. This way you're not bottom fishing trying to catch the bottom. If it accepts over 64 and a half, we've cleaned out the sellers underneath it, right? And that's still a nice trade, 65 to 69, that works nice. 66 to 69. But here, I don't know if that's going to hold, right? I'm not a genie, right? If it does hold, it tells me a lot about the business tonight. If that poor low holds, it means that there's a serious amount of buyers underneath it, right? So usually pro traders will short a market down to the bid. When they find the bid, they'll cover, and then they can flip and go long, right? That's what large traders do. They'll short a market down to find the bid and then cover. See how it's lifting? Right? So the poor low is holding. Pretty cool. Right? So now you know there's going to be a seller here, and you know there's going to be a seller here. Right? This is for short-term traders. The lows are getting higher on these 1-minute candles. Right? Right? So if it holds, it'll rotate back up. It's going to get tested again. Here we go. See how we got to that area and the seller stepped in? Right? So if you were long and you're still holding it, eh, let's see what happens now. Right? There. That's a proper low. Now, when we take that low, does that bring in buyers? Right? It's bringing in a few buyers. It's like we're opening the door to the store. And some buyers are coming in. Let's see if that holds. If we accept underneath 60 and a half, right, then your next target down is 59 and a half. Let's see, right? I like to let large traders work this out. I don't like to just unnecessarily lose money, right? And this is where everyone gets this and they're like, oh, I have to buy the absolute low of the market or I have to short down here or whatever. I'm like, yeah, you guys go ahead, right? Tell me how it works out, then I'll trade. Okay? It's like when you go to dinner with really rich friends. You don't need to reach for the bill, right? When the check comes. right? Let them work that out. You go to the washroom, get alligator arms, right? And this is what traps people because their emotions get the better of them because they don't understand what's going on, right? So, three candles with the exact same low, right? That means the selling shuts off at 60 half, right? Let's see if we get some rotation up. And I want to see, where's that seller? They're here. They're lurking. Where are they? Are they there? Are they at 63 and 3/4? I don't know. Am I happy to let somebody else pay to find out? Indeed, I am. Right? You want to be smart about this business, right? Unless you've just got millions of dollars to throw around and you're looking for a tax loss, right? But most people aren't. They're trying to make a buck. The next stop down is 56.45. That's the M low, right? That's where everybody got trapped short because the market sold off and then M period opened and it scooted all the way back up. So all of the people from yesterday are trapped short in this area. That's why we have responsive buying. So we don't know what bids are down here, right? Obviously, they're fairly strong because we've been holding for a few minutes, right? There's a response at 61. The longer it stays under 63, the less sure I am about that low. Watch the offer. See the offers lifting, right? So look, these lows we haven't been able to take out that low yet. So if you're long, that's a good sign. Bit of a nail biter. You know that there are sellers here. So we need to get past these sellers and get over 63, right? If you're long against that low, right? Your risk is fairly tight, right? It's just underneath. There you go. We finally ran out of supply. There's 64 and a half, right? And if you didn't take that long, that's okay. Wait till we get over 64 and a half, and then this position here will be underneath us and we can go take it and sell it higher. Yeah, see, the volume's all under 63. that big chunk of volume. So if we have sellers compete, we'll come back down into the 62 area, right? Watch the offer. Watch that offer, right? If it lifts above 64.5 and stays there, there's that seller at 64 and 3/4. Can we clean them out? There we go. Can we get a 65 print? See if we can get a 65 print. Can we get a print? There we go. There we go. Now you're long, right? So if you're long at 64.5, put your sell orders out. Take advantage of it because there's going to be a seller at 65 and 3/4, right? That seller, if you still have product, next seller is going to be up here, right? At the top of that candle at 67, right? So there you go. Now, a lot of people will say, well, you missed the 61 to 64. I don't mind that because then I know the inventory is underneath us, right? And if we stay over 64.5, then you can still hold the long, but look, there's still sellers at 65.5, right? Spend some time watching the market when it's slow and choppy. You'll really learn a lot. If you're in trades all the time, you're going to be biased hoping your trade works out. And that's understandable. But you're going to lose your objectivity. Hope that makes sense. All the inventory is above us. So it might take a minute, might take some time to clean it out, right? Practically. Now, if you're a trader and you've got a size account and you're building a long position, right? Say you are. If you're building a long position here, there's your out, right? If you're not a scalper, say you're building a long position, right? You're building 61 to 63. If it starts taking the 61s, then you know you're in trouble, right? But what you want to do and how a larger trader would work this is they'd do this, right? They'd be buying product under 62, 62 and a half, and then you'd be selling product here, right? So you're a buyer here and you flip to the offer here, right? So you're not daydreaming about this, right? You're actually doing practical business. Nice, Moran. Really good. You're really developing your your situational awareness and your execution. That's really cool to see. I don't know about that low. Let's see. Let's go test it again. Could be a nice little rotation between 61 and 65. Or 64, sorry. Yep. Hope you guys learned something tonight, this morning. Yeah, I'll use the same levels, right? So there's my balance is 64 half to 69 half, right? And if we get, yeah, I'll just double them, right? So my cost basis is here. This is the discount zone 2 times, right? And if we break 54, then you go into 4 times discount, right? Yeah, you can redo your cost basis if you want, DJ Trader. But if my levels work, why screw with it? Do you understand what I'm saying? I like to have my levels set and test them. I have a 5-step method. If you come into our Microefutures room, we'll show you that. We have a 5-step method where we do the same thing every day. So if you want, you can go and change your balance zone and cost basis, right? Say you just sat down and started trading. You'd go, oh, there's a cost basis right here, right? But I've been up for a few hours and I've already got mine and it's working, right? We do look above and fails of 64 half, right? So I don't like futzing with stuff once I've got it set up. Now my levels work. I know they work. I'll just trade them. That's another thing about retail traders. They lack focus. They're always jumping around, trying to, what about this? What about that? What about this? What about that? Get it set and then just sit tight and watch. Simple, right? The less fidgeting you do, the more you'll be able to actually concentrate, right? You start jumping around all over the place, you lose concentration. Notice sometimes I'll be answering questions and we'll miss trades, right? Because somebody will ask me some kooky question, which is okay. I want you guys to, right? But we'll miss trades because we're focused on something. People will ask, what about, you know, Jupiter rising, or what is that, Mercury in retrograde compared to the fractal energy of the mishmash of the blah, blah, blah. And I'll be like, huh? Take your eyes off the chart, you miss a trade, right? Yeah, so when do you need to adjust the zones, RS? Say we have a Fed move and the market rallies or drops 40 or 50 points and then starts going sideways. Then you can adjust the zones. But if we're in the same range and we don't leave the range of the previous day, right? There's no need to adjust the zones. Just leave it be. See? Just makes your life simple, right? Now, for those people who say they have ADHD and stuff like that, I have an exercise, right? Put one chart on your screen, put your bid ask indicator on it, and just watch the offer. And see if you can watch it and concentrate on this and not look at anything else for 30 to 60 seconds. Don't look at another chart. Don't look at your phone. Don't look at the VIX. Don't look at social media. Don't futz around. Concentrate on this. Okay? And then expand it to 90 seconds. Then expand it to a couple of minutes. Right? And see if you can just watch one thing and focus. Build your focus. Your focus is like a muscle. You have to exercise it. Right? We are taught to have a 30-second attention span. That's how they take our money. Now that there is both an active buyer and a seller, when do you know that you are declining to continue in the market? DJ Trader, I'm sorry, I don't understand the question. Do you mean I'm not taking a trade? What's declining? I'm declining to participate? So when there's an active buyer and a seller, they're the same people, DJ Trader. You just dream, Nuran? Sorry, I don't understand. When do you know that you are declining to continue in the market? Does that mean not trading? When one stops being in the market and leaves the path to the other. Work with me here, brother. What do you mean stop when one me when I stop trading when the I'm still a little confused. Maybe just try asking in a really simple manner. So when I stop trading, when I stop being in the market, yeah, sometimes if the business doesn't suit me, my trade setup doesn't present itself, why should I be risking capital? I hope that's what you're saying. Anywho, that's it for me tonight, this morning. I hope this was useful. It's moving down slowly because there's quite a few bids underneath that 59, 58. Remember, that's where the shorts got trapped. And I neglected to mention this when we first started, right? And that's why we watched that close. Because when people got trapped short here, there's a large short position here that equals buying to cover. That's why we keep doing this. It's not just a straight down move. Okay? Thanks, everyone. Appreciate you folks. Come visit us at Microefutures. I'm VWAP Trader. If you like these videos, subscribe so you can get notified when we do our sessions. Tomorrow, I'm going to be doing a special session. I'm not sure what time it is. I'll try and announce it on X. But Thursday, I'll be doing a session on Market 101, cutting through all the BS, what you really need to know. Thanks, folks. Have a safe trading day out there. Bye for now.